want to say first, the phrase crazy rising rates is a little different than if I told you today's overnight rate is 1.6%. Right, so it's like one of those games where a lot of times what you see is based on where you sit. And at 1.6%, these rates are still historically low. In summer of 2019, we thought rates were pretty low at 2.5%. So we're still not even at the levels we were in 2019. So I say that just as context. The economists have a phrase they call the neutral rate of inflation. And the neutral rate of inflation is, think of it as the rate at which you don't have your foot on the brake, but you don't have your foot on the gas. The car's just coasting along with no influence from monetary policy. It's kind of a neat concept, and it's an important concept. It has one limitation, which is that the spread of estimates is wide and the confidence interval is wider. So if you look at the estimates of my colleagues on the FOMC, they would estimate that's between 2 and 3%. But if you talk to some of the researchers in the area, they would say the confidence interval is kind of plus or minus 1.5%. So, maybe at the very lowest it's 1.5%, maybe it goes up to 3.5 or 4. That's kind of the range of possible, which means you can't make your decisions on when to pause or when to slow down based on an analytic construct. You actually also have to get some sense of what's happening in the economy, which is why we spend so much time on the ground trying to understand what's happening, in particular to demand. At what point are people starting to shrink demand? That's an important thing for me to try to keep my fingers on.